Well, good afternoon. Coming to you live from the Johannesburg Stock Exchange. Time to have a look at how markets are performing. Asian markets are mostly higher. This as investors digested Chinese inflation figures. PPI coming in at 10.7% versus the expectations of 10.5%. So as a result, mainland Chinese markets are mostly lower. Elsewhere, the Nikkei in Japan up 1.4%. Markets in Hong Kong are closed for a holiday. Over in Europe, we are seeing markets higher. As we look at what's happening on the US side, stock futures at this point also higher as investors brought into stocks that are linked to the US recovery. Locally, there was some news that have come out, and we'll unpack all of that with Patrice, who is the Chief Investment Officer at Ashburton Investments. Patrice, thank you so much for your time. I mean, as the JSE opened this morning, mostly firm in line with global peers who looked a bit mixed. Again, this is as investors are looking at that Fed's timeline for tapering. How are we looking now?
Good afternoon, Nastasia, and to your viewers. Yeah, we're looking very good. At the lunch break, the JSE is up just over 1%. And it's a really risk-on global recovery story. It's the resources stocks leading the charge with precious metal prices higher. So we're seeing the diversified miners led by Anglo-American up 3%, and the gold miners and platinum miners also advancing strongly. So it's one which we've seen over the last few weeks, whereby as metal prices are ramping up, especially in the energy space with coal and oil, this is dragging the whole metal complex higher and starting to drag the JSE higher as resources start to do better after having pulled back in the second quarter of the year.
Right. So news coming out a little bit earlier on that Long for Life CEO Brian Joffe is stepping down at the end of next year to take up a role as chairman. Let's talk about Long for Life as a stock. I mean, what have you made of its trajectory and the way the market has reacted to it, especially as it relates to that discount?
Yeah, interesting. Brian Joffe, obviously the veteran founder of Bidvest, which now split into Bidvest and Bidcorp. The view of the market was when Long for Life was put together, it would be like a mini Bidvest. And it never achieved its potential. I mean, the share price jumped 15% during the day when that was announced. And I think the reason, quite sadly, is that the market is saying that the intrinsic value, I think the net asset value of just over 7 Rand, it would be better off for the company to be broken up than to continue on the acquisition spree that we've seen under Brian Joffe. So the big 15% price reaction, I think, is an indication that the market sees the sum of the parts really being worth more than the current share price. So some of the parts of around 7 Rand 30 versus the current share price, even after the 15% jump of 5.16. So some value perhaps to be unlocked here in that stock.
All right, so U.S. earnings kicking off with J.P. Morgan yesterday. They reported a solid set of numbers. However, the market didn't quite react as positively. As you anticipate U.S. season unfolding in the next few days or weeks, what will you be looking out for?
Yeah, it's a very good point, Nastasia. J.P. Morgan net income up 24%, although we saw some pullback in the share price because that was largely discounted. We're expecting really the whole consumer discretionary space to be the big winner. Consumers in the US especially are quite fearful of inflation. Inflation is, you mentioned China earlier, where PPI inflation is over or close to 11%. The inflation numbers in the US also have been ticking up to close to 5%. You have supply chain issues, and the consumers are trying to get ahead of the inflation surprise and doing their holiday shopping early because they're worried about bottlenecks. So they want to get their goods on board as quickly as possible, and we expect consumer discretionary type of stocks like the likes of Amazon to do quite well and report quite strong numbers when they report in the US.
On that note, then, what does it mean for you in terms of where you want to put your money and the type of valuations you would be expecting?
Yeah, I mean, it's a very good question. I think we've seen in our local market that the JSE had a bit of a pullback. I think it's offering select value in the market. We also find value in the bond market where bond yields have sold off quite aggressively. We were trading a few months back closer to the 9% level, now closer to the 10% level. So SA bonds and SA equities offer value for us. Yes, there's a good story offshore in terms of offshore equity, but some of these markets, especially the US, are very highly priced already. So we tend to think a rotation towards South African equities and bonds makes sense at this point in time.
Given the environment that we've just described over our conversation, what's the one thing you want to get right?
I think there's an interlink here between inflation and how the central banks behave. So you've been mentioning, the upward surprise or negative surprises from inflation in China or in the US. That will influence how quickly the central banks globally and locally with our reserve banks start to tighten interest rates. So if we get the inflation story wrong in the sense of inflation is a lot more sticky and surprises us, we might have central banks slamming on the brakes faster and harder than everyone expects. And this would be a very negative surprise. So we're watching that very carefully.
Patrice, always a pleasure having you on the show. That is Patrice Rassou, who is the Chief Investment Officer at Ashburton Investments. Don't go away. In a short while, I'll be talking to Kevin Brady, the CEO of A2X in the Alternative Investor. We'll be back.